Welcome to Retail Investors Decoded, a new podcast by Finamize for Business. We'll be speaking to leaders across the financial services industry about how to attract, retain, and engage modern investors. My guest today is Maike Currie, VP of Personal Finance at PensionBee, author, and one of the UK's preeminent voices on retail investing, pensions, and financial education. Maike, you have, before joining PensionBee, written a book called The Search for Income. You've worked across asset managers and in journalism. Excited to get into all of that with you. So first of all, thank you for joining me.
Well, thanks so much for having me, Carl. I'm really excited to be here.
Awesome. So I'd love to start with that journey because I find it so interesting when people have gone, in a few different directions before landing where they have. And maybe just talk me through it. You started as a journalist, you've worked at a handful of asset managers, now at PensionBee. Maybe just talk me through how you've gotten here.
Yeah, so it has been quite a journey. I started my career as a journalist on a daily newspaper in South Africa, covering economics and business, and it was a great place to learn and to frame conversations and to write articles at breakneck speed. It was a daily newspaper. I then moved over to the UK, which is now 20 years ago. I can't believe it. It was before the 2008 financial crisis, and I was working for a number of titles within the FT group. First, it was a publication that was targeted advisors, which was a really good place to build my knowledge in terms of the whole landscape and the conversations advisors were having with their clients. It was pre-RDR. I then moved over to Investors Chronicle, which was brilliant, and I covered personal finance, funds, investment trusts, also dealt a lot with the companies writers on that side. I then decided that I was going to go across the river to the dark side, as they might call it, or the better paying side. But I then started working for asset managers. I worked for Investec Asset Management. It's now 91, which was really that big transition going from a journalist to the corporate world. But I always missed, having worked in all these different spaces of the finance universe, if you like, I always missed working with a direct consumer, working with a retail investor, or as I always used to say, the investor, because I think that the challenge there is really creating content, creating conversations, making sure that you get that person, man, woman on the street, to engage with their investment, with an ISA, with a pension. And that kind of led me to the platforms, the DIY platforms. So I spent a number of years working for Fidelity International for their personal investing business. We had a lot of fun there. We created a lot of content. We worked with the media. And then, of course, the BMOth, which is Hargreaves Lansdowne, approached me and said, you want to come down to Bristol and work for us? Spent almost 3 years working for Hargreaves, again, in the marketing department, creating content, doing a big drive on engaging women. Hargreaves at the time had around 600,000 women investors and speaking to them. And now I'm back in London and I'm in yellow working for PensionBee, really talking about pensions as the ultimate vehicle to drive engagement with investing.
Fantastic. Lots there we're going to unpack. I want to touch on a couple of things though. I always ask journalists who have crossed the river this question. How do you deal with or is there an inherent tension where as a journalist you are truth first, finding the facts, presenting the information, making the case? Is there a tension with that and, in a sense, trying to do all of that, but for an institution? Because, there's a bottom line to think about that is perhaps at odds with your journalistic instincts. How did you square that circle, and how do you continue to square that circle?
It's a really interesting question. I think as a journalist, it's very much about not having a bias and showing both sides. And the skill set is really storytelling and balance and finding the angle. And I've used those skills that I honed over many years in creating content for organizations. So the principles still apply. People don't want a line fed to them by a company. They want something that's really engaging, entertaining, that they can relate to. I always say we talk about personal finance, but the clues in the word personal finance. It is about the personal. And if you can create content and conversations that are engaging, that is what makes the difference. The question about working for a company, yes, there's a commercial tension, but it is a really good skill to learn too, because often as a journalist, you think about the angle or the story or the exclusive, but there's a commercial benefit, and I think I've benefited from being on both sides and using those skills on both sides.
Okay. And then the other thing to maybe pick up on is, what's your unique perspective and insight that led you to the nucleus of this idea, I'm going to write this book? How did you get there?
Well, the first thing to say is when I wrote that book, I didn't have children. So I had a lot more time.
Yep.
I was working for Investors Chronicle, and it was post the 2008 financial crisis, and interest rates went to rock bottom, and everyone was desperate to find yield, to find income. And that was the angle of the book. It was really interesting because at the time, no one thought that interest rates would stay so low for so long.
I miss those days.
I know. That was really the time to be getting in onto the property ladder and all of that. But I think for me, it was, one, I had the time. Two, it was a really good exercise in getting my head around income generating investments. Yeah. I still think that we're in an era where we've got an aging population living for longer who need income generating assets. Yes. So it was a really good thing to do. I built my knowledge. Of course, the world of products and funds and investments move on so quickly that if someone read the book now, they'd be like, the ISA allowance has gone up a bit since you wrote this, Maike. Yeah. So, yes.
Well, when your publisher gets in touch for the updated version, I'll be in touch for my commission. No, let's jump forward a little bit. I want to combine a couple of other things you said. Speaking to women, and obviously where you are now at Pension Bee. Is there still a pensions gap as far as women are concerned? How big is it? How big an issue is it?
There's a massive pensions gap. And to put it into context, people talk about the gender pay gap a lot. Yep. And it gets a lot of headlines and it's infuriating, and rightly so. But the gender pension gap, if you think the gender pay gap, despite the fact that it's been against the law illegal since the 1970 Equality Act to pay men and women differently for doing the same job, the gender pay gap still exists. And depending on what industry you're in, it's around 18%. And if you've been working as I have in many different industries, you'll know that the gender pay gap is real. Yep. The gender pension gap is twice the size of the gender pay gap. People often say, well, is the gender pension gap because of the gender pay gap? Yes, the gender pay gap plays a role.
Compounding.
But far more, the biggest contributing factor to the gender pension gap is career breaks. Right. The fact that women's careers are different, and women are more than likely over the course of a lifetime, they will take a career break, either to raise a family, because biology dictates women have babies, and even though the caring should be shared, women will take a break or take a gap from their career. And then at the other end of the spectrum, often when women have their children, and we often see that gender pension gap really in the childbearing years, which increasingly is older, so in their kind of mid-30s. But when they come back after those years or that time raising children, and they're just getting back in their 40s, middle 40s, early 50s, and they've got all that experience, then there's what I would call the second penalty. I often talk about the motherhood penalty, and people get really upset about that term because they think, oh, motherhood is a privilege. Of course it's a privilege, but it exists. There's a motherhood penalty. It's not a term that I've coined. It's a term coined by sociologists, which is the impact when you have children on your career trajectory, on your chances of a promotion, on your chances of a pay rise, and crucially on your pension. Right. And it stands in direct opposition to something known as the fatherhood bonus. When men have children, actually society and workplaces say, oh, he's a dad now. We should maybe get him a pay rise. You know, he's more responsible now, possibly a promotion. So the motherhood penalty is real. I'm
going to take that to the board. We're going to have some tough conversations.
There's definitely that. And then when you come into your kind of late 40s, 50s, you've got all that experience. Then we've got what I call, and this is a term I've used, is the good daughter penalty. You find yourself with adult children at home who, as we know, are struggling to get a foot on the property ladder, are struggling with job prospects, are struggling with the cost of living. So a lot of people have adult children at home, and then they have an older generation who need care.
Yeah.
And more often than not, rightly or wrongly, it falls to the daughter. So it's that sandwich generation that is squeezing women just at the time when they should be really putting everything they can into their pension.
Okay. So, people having children later in life, that's, current phenomenon. But if I bring all that together, what's your sense of the direction of travel? Is it getting worse? Is it getting better? I feel like awareness is improving, but where are we on action?
It's a very good question. I mean, awareness is improving. There are more conversations about it. There are more money influences. There are more conversations about money, which is all a positive thing. The reality, though, is most women, when they reach their 50s, they will on average have around £100,000 less in their pension pot than their male counterparts. And it's then very difficult to close that gap.
Gotcha.
So
here's the $1 million question. We've identified the problem. We are aware that awareness is improving. There's still a big gap, 100K, to solve. Whose responsibility is solving that gap? Is it employers? Is it governments? Is it mothers, fathers? Whose job is it?
I would say it comes down to 3 pillars. So the first is the personal. So we need to talk about money. We need to talk to our daughters about money. We need to talk to our partners. We need to address that from a personal perspective, and we need to see more women. More women are breadwinners now, but we need to talk to women about investing, about closing the pension gap. So there's the personal aspect. There's the professional aspect that we know that we are in a male-dominated industry. Like it or not, you work in financial services, I work in financial services. You walk into a room, it's still predominantly blokes. We need to see more women. And actually, women start out in this industry when they're younger, in their 20s, and then they disappear. So there's no pipeline. Yeah. So it needs to be more friendly to keep women from a professional point of view, welcome them back into the fold when they've been off on maternity leave, as with men on paternity leave, and giving men more paternity leave. That's a fundamental issue. And then there's the policy element. Policy element from government, because pensions were designed not taking into account women's career trajectories, not taking into account women's lives. There are structural issues at place. I mean, things that I often wonder about. Why is it still that if you are out of work and someone can contribute into a pension on your behalf, that amount of money, £2,880 with a $720 in tax relief from the government, that amount, $3,600 a year, has stayed unchanged for many years now. So I often say to women, look, if you're not working, remember someone else can still contribute into a pension on your behalf. But it's £2,880, and it's been that amount for about the 20 years that I've been working in financial services.
Inflation or lack of inflation in pensions is its own
it has not even been taken into account, right? You park the triple lock and all of that now. Carry forward rules. It's a brilliant concept that if you haven't used your full pension allowance, you can carry forward unused allowances from the previous 3 years. But what about women who took a career break a few years before that? So policy needs to update. I think auto-enrollment has been a huge success in the sense that it is addressed participation. It's addressed inertia. It means you're in unless you choose to opt out. So a lot of people are saving into workplace pensions, and that is a good thing. It hasn't addressed adequacy. We are not saving enough. We know the 8% is not enough in terms of retirement and getting enough into that pot. But it also hasn't addressed the fact that the world of work has fundamentally changed, right? We've had digital revolutions, we've had the odd pandemic, more of us are working flexible, and a lot more women are choosing to work for themselves. They're self-employed. A lot more of us are choosing to, like general populace is choosing to be self-employed because of the flexibility it gives you. But the caveat, I guess, or the Achilles heel is no one is saving into a pension for you.
And no one's coming to save you.
No one is coming to save you. You've got to set up that personal pension yourself. And we need to create more awareness of that. We also need to question whether auto-enrollment goes far enough. Auto-enrollment has been designed around the payroll.
Yes.
And most of us aren't employed around the payroll anymore. So one proposal that Pension B has put forward and is lobbying really hard on is, can we look at a way to get the self-employed set up in auto-enrollment by linking it to self-assessment?
Okay.
So when the self-employed complete their self-assessment, there's a trigger to say, have you put something into your pension?
Got you. I wonder, again, startup hat on, really clearly identified the problem here. From a policy point of view, shouldn't the government simply have a different set of pension rules for women? Because there's a £100,000 gap. Women live longer than men. Therefore, the effective gap is greater, or the effective need for cash is greater. I just wonder if the rule should be different. And so, I don't know, women get 10 years of catch up on pension contributions, and so on.
It's an interesting concept. It'd probably go down like a lead balloon.
Oh, yeah. That's why we get to say it here, not down the road in Whitehall.
But I do think what we need policy for what we call invisible workers. And invisible workers can be men or women. Those people who are working 0-hour contracts, those people who are keeping the gig economy going, people who are doing caring work. There's a whole bunch of people keeping the economy going, but because they are doing this invisible work, but they're not falling within auto-enrollment threshold. So, auto-enrollment, you need to earn a minimum of £10,000. If you're not in that threshold, you fall out of auto-enrollment and you don't get enrolled. So there are loads of policy tweaks the government can make, and they need to make, because there's a risk that there's a whole generation left behind with not enough pension, and we know the state pension age is increasing, and we know it's not enough. Even the most frugal of us will struggle to live on £12,500, where it is now roughly a year, and that is if you get the full state pension, which means 35 years of national insurance contributions, which most women again won't have because they might have taken that career break.
Got you. Okay, I want to shift gears a little bit and bring it closer to home. We might make some enemies, because I'm reminded of Halo, which was the Sky Sports TikTok account that was basically Sky Sports Pink, trying to get women to care about football in particular, but sports in general. And they were making memes about, maybe Ronaldo scores a goal and they make him pink because girls like pink. That went down like a lead balloon. People hated it and they quickly got rid of it. All that to say, what is good communication and engagement like in this space, whether for women or around pensions in general? Who's doing a really bad job of it? Who's doing you don't have to name names, although
you're putting me on the spot.
No, people can put their names in the comments. But who's doing a good job? What are the pillars that you've seen work well?
The first thing to say is definitely don't add a pink hue to anything, or tint of pink, because we know that that's an age-old trick of marketeers. They think they can make it a little bit pink, make it a little bit feminine, and the woman will come. Women don't need to be talked to differently. Women don't need a pink product, a pink ISO, a pension wrapped in a pink bow. What we all need to be spoken to about the outcomes. Why should I be putting money away every month? Why is compound interest so powerful? Why should I be investing? Why should I move that money from my cash ISA into a stocks and shares ISA? Why should I care about where my pension is invested, how much is going in there, and whether it's well invested? And the way to do that is really to say, let's stop talking about the technicalities. We work in the industry and we're all geeks and we love to get into the nitty-gritty detail and to show off how clever we all are. That does not help the consumer. We often say, we should stop using jargon, but do we really? If you look at pension literature, are we saying this part is going to determine how the longest holiday of your life is going to go? It's going to be whether you're going to be sipping pina coladas on a beach, or whether you're going to probably be having to do some part-time work in the local supermarket because you don't have enough in your pot. So, which is quite shake you by the shoulders kind of stuff. But we've got to relate to people in a way that engages them. It's hearts and minds. And we know Martin Lewis does a really good job talking about all the things related around personal finances and coupons and discounts and all that. We need that kind of Martin Lewis approach to investments.
Yes. So part of why I wanted to bring you here today, and part of why I feel like we're quite well aligned is one of the things I'm quite happy to get on a soapbox and spout about is that the financial services industry, by and large, has abandoned people when it really matters.
Mm-hmm.
You know, I'm a retail investor, I'm a pension holder, pension haver, and yes, I'm relatively sophisticated, but that's no thanks to my bank, my pension service, or the government.
They haven't made it easy.
Exactly. And so I think the challenge that the industry has is when they wake up and decide, oh, actually, Carl's quite important, we should say something to him. Why on earth would I listen to them? Why would I listen to the people who've ignored me for the first 30 years of my life in the second 30, right? And that's where I think, you know, it's true of Finimize, but it's also true of PensionBee as a relative disruptor, although you've been around a fair while, you know, you're not part of the problem, so to speak.
Yeah.
And so there are certain things that I've seen PensionBee do in terms of how it communicates and engages people that I think the rest of the industry can learn from, and I think we're quite well aligned there.
Yes, I think there are two issues here. One is the proposition. So if we think of the legacy providers, the propositions don't make it easy. It's not easy to, with one click, open up a pension or an ISA.
Yeah.
But I've always been astounded at when people make that decision, when they actually decide, I am going to invest and I am going to engage with pension, how much they're willing to put up in terms of proposition that is not slick and isn't easy, and they have to end up phoning the call center and they have to end up sending off paper forms. When they've made the decision, they can kind of power through. But we are talking about a new generation who does not have the patience, you know, that kind of buffer phase when something's taking too long I do not have the patience.
Exactly.
I move on to the next provider who can give it to me instantly.
Exactly.
That is the reality. So there's that bit. Propositions need to improve, but to get me to the place where I'm considering the proposition, that's when we're talking about marketing. That's when we're talking about content and engagement, and you get me, you talk in a language I understand, you address the problems I feel, and as I said, it's not about us being clever. You know, I do my yellow coat interviews and I ask the people, what do they think? I'm not telling them. And I do find it fascinating. I recently did Vox Pops in Manchester. Manchester is where it's all happening. Yeah. Manchester and Birmingham. And we started off asking people about pensions. And honestly, surprisingly, pensions weren't front of mind. A lot of people weren't. I'm like, do you have a pension? Are you engaged with your pension? And then we start talking about, well, what do you want to do one day when you're not working? Yeah. And even just framing it in that way, not saying, what do you want to do when you retire one day? Hello, I'm just trying to get through today, lady in the yellow coat. I'm not thinking about retirement. But what if I say, what do you want to do one day when you stop work?
Yeah.
You want to catch that bus or that tram and you're running late, but what is your dream? Talk to me about that. And do you know that your pension is going to fund that? So you should lift the lid. You should know what's going on in there. And you should be having conversations with your nearest and dearest about how you can get that outcome you all want collectively. But it's small tweaks like that. And when you actually go out on the street and you're talking to real people, you do get a real sense of how detached they are from our world. We love our world, right? Because we find it really interesting, and we can get I always call it navel gazing. We get obsessed with our bits and what's our competitor doing. But really, we're against the backdrop where people are struggling with the cost of living crisis. They've had multiple crises to deal with. We've gone from the pandemic, which was pretty seismic, to the war in Ukraine. Now we've got war in the Middle East. We've got these heat waves. It just feels like it's never ending. Yeah. Now, in that environment, against that backdrop, you've got to convince people to talk about pensions and ISAs and investments. They're like, I'm just trying to get through the day. Yeah. So it's quite interesting because PensionBee's philosophy, and this is the philosophy of our chief marketing officer, Jasper, is absolutely brilliant, is he's not competing with, and I won't name them, but just think of the incumbents in the pension space, the legacy workplace pension providers. He's competing with Netflix. He's competing for people's attention. That's the first challenge, because inertia is the default. Yep. How do we get people to do something? But also, how do we get people's attention? Because we are competing with the likes of Netflix and 1,000 social media apps.
Yeah, and you said something really powerful there, which is about getting someone to go and have the conversation. So our data shows about 40% of people who get started investing do so following a conversation with someone they trust, colleague, friend, family member. And that is true across age brackets, whether you started investing this year or 10 years ago, it's pretty consistent. And so the way I think about what you've described is those vox pops, it's the breadcrumb. It's the thing that leads to the catalyst, right?
Yes.
It's the catalyst before the catalyst, I guess.
Yeah. Yeah, it's really interesting. I mean, a word that's often bandied about is confidence. People need to get confident. They need to get confident. What I've seen from research that I've done at multiple places, the thing that actually makes people feel really good is this notion of control. And especially against the backdrop of mad world.
Yeah.
Things are happening that are so beyond our control. But actually, when you do this one thing, when you consolidate your pensions, or when you actually make the move away from a cash ISA into a stocks and shares ISA, and you start seeing that exponential growth that the stock market can give you over the long term, you get a feeling of control. And that is really powerful. And then you want to do more because I've actually sorted this thing out in my life, this thing that has been in the back of my mind. I've known I needed to get my head around my pensions. I've known that I must invest. I'm never going to be a DIY hobbyist investor. I'm never going to sit and watch the investments, but I know that I'm with a good provider. My pensions are consolidated. I'm in a ready-made fund, and it's one less thing. I've got control of that, especially for women. People also say, women need more confidence. Women are so risk averse. That's my number one.
Women are already better investors than men.
Women manage the purse strings. Women can, are really good with money, but the world tells them that they're not. And there's a narrative around maths, and there's women need to be good, and saving is good, and men need to be brave, and investing is brave. And fundamentally, that's a problem. And that's why we have this challenge as a society, as a British society, to get people to invest, because we still have this underlying message that saving is the prudent thing to do.
So exactly on that, I think, you've touched on one of my big bugbears with the industry is, it's investors who are the problem. People don't feel this, or people don't know that. I'm like, well, no, you are all the problem. It's your job to have this knowledge sort of outside of your own brains. And because you're sat in a room with people who get all this stuff, and you and I could quite easily descend into a conversation that's all in jargon and think we're being really accessible because we understand each other. As soon as it leaves this room, it falls on deaf ears.
Yes.
And so agreed with the solution around confidence and so on, but I think you said it, navel gazing. There's far too much inward looking. Well, that's the opposite of navel gazing, whatever.
I get what you're saying. I think there is that aspect of how we talk about investing, but there's also the bit about how do we bring companies that get people excited to the retail investor. And, there's a lot of talk about investment campaign to bring more people to the world of investing. And is this the TELSID 2.0, the next iteration of it? The reality is that campaign was successful because it gave people something to buy. A slice of British Gas, the company that heats their home. And when you tell people you can own a slice of something that you understand, that is near and dear to you, then investing becomes real. And I've spent so much time thinking about this. What is the evolution of becoming an investor? How do people start? And one of the key ways people start is when they're working for a company and they get equity. And they can own a share in that company. And it might be a privately owned company and it's not a listed company, but owning that slice of a company gives you skin in the game. And then you can also see the exponential way you can grow wealth through a slice of a company. And then it starts getting exciting. I might hold another slice. I can actually hold a slice of Apple or Microsoft. And on that point, we need companies in the UK that can get people excited. And people often talk about the fact that all the tech giants are in the US and the like. But, Primark is talking, I shouldn't be talking about individual stocks, but when we have Primark leaving AB Foods, every young person can say, Primark, I can own a slice of that. But is that going to come? Is it going to be some clever corporate restructuring for institutional investors, or will it come to the retail investor? Think about the banks we use, the challenger banks, the apps. if I had the opportunity to own a slice of a brand I use every day, then investing becomes real.
Yeah.
And I'm sorry to say, but that is why a lot of people have got so excited about the SpaceX IPO, because space, oh, that's exciting. We can have a conversation. Oh, Elon Musk, love him or loathe him. This is someone you think or is real celebrity status, for better or for worse. So we've got to make investing real and tangible, and the way to do that is to bring those household names to investors,
which frankly the US has nailed on, I think, compared to us.
And now what we do see is we see these AI IPOs coming to the market, and we see retail investor money going to the US.
Yeah.
So not only are we losing companies in the UK as we're on the bargain sale shelf,
Exactly.
10 years of Brexit, private equities coming in, overseas buyers are coming in, they're buying British companies because they're cheap, because of the valuations. We're seeing our own investment money going to US companies. How are we ever going to create some excitement about investing if that is the backdrop?
It's a tough challenge, for sure.
It is a challenge.
What's one topic you think no one is speaking enough about when it comes to pensions?
So I find it really interesting, the focus that we've had in the last 2 years or so on ISAs, individual savings accounts, as this vehicle to unlock investment, and a lot of tinkering with the cash ISA allowance, and now overcomplicating the stocks and shares ISA allowance. I believe, and I believe this hand on heart, and it's not just because I work for a pension company, that the key to getting people to engage with investing is to plant the seed or drop the bomb that your pension is invested in the stock market.
Yeah.
And this is my mic drop moment I do when I do talks. I always ask people who in the audience is an investor, and depending on who I'm talking to, few will raise their hands. And my second question will be, who in the audience has a workplace pension or has a pension?
Yeah.
And most people will raise their hands. And then I'd be, well, then my kind of line would be, well, you are an investor, because that pension is invested in the stock market. Gone are the days of defined benefit, final salary, Rolls-Royce, gold-plated pension schemes. Your pension is invested in the stock market. So hello, you are an investor.
Yeah.
And if we can use pensions as a way to get people excited about investing, where is my pension invested? But also, because pensions are these long-term vehicles that you're going to have for 20, 30 years, they also have that power to unlock compound interest. So you can really see over a lifetime how much you can make through the power of investing with a pension. So my challenge would be to Rachel Reeves, or whoever is our next chancellor, look at pensions.
Yeah.
Kind of create that conversations around pensions as the ultimate investment vehicle. Get people excited. Wouldn't it be amazing if young people, and by young people I include myself in that, sat down and spoke about their pensions with the same passion as they do talking about Bitcoin and trading accounts?
I think that's a massive thing that I wish we could import from the US, where you're standing around in New York having a drink and people say, oh, what's in your 401k? Have you been keeping track of insert megatrend here? Maybe it's the space economy, maybe it's healthcare and AI and whatever else.
Yeah, absolutely.
And here it's like, oh, have you been tracking that? Oh no, I couldn't possibly. Well, no, that's
they're definitely,
structurally wrong.
I even think of Australia. I've got 2 stepchildren in Australia in their late 20s, and they talk about their pensions all the time. They're not interested in investing, but they're always keeping, what do they call it, the supers? They're always keeping an eye on that. So there's this awareness.
So when it comes to awareness and driving the conversation forward, influencers or finfluencers are a rising part of the mix. What's your opinion on them? Where do they fit into the mix?
I find it fascinating, because 10 years ago this concept didn't exist, and there were very few people talking about finance, investing, pensions in an engaging way. Now there are so many out there. I think ultimately it's a really good thing. It's a very good way of getting people engaged, and it is that key breadcrumb.
Yeah.
And I love the fact that there are so many finfluencers coming up talking about the products I'm really passionate about, which are stocks and shares, ISAs, pensions, and everything that fits within that ecosystem of personal finance, including savings platforms.
Yeah.
So I think it's a really positive thing. I think there are rogue players. We know
Sure.
that. I think it's a very difficult thing to regulate. And I think to create an even playing field between companies and content creators, we do need the regulator to step in, because companies aren't always creating engaging content at scale because they're worried about compliance, because they're worried about regulation, because they might have a compliance warning this long.
Do you think that's what it is, though? Do you think they just don't have the capability or the willingness? Because they always fall back on these excuses, but all the excuses are falling away faster than you can count them.
Yes,
And
I
yet
think
they're still not
I think
improving.
it's a combination of factors. I do think it's resource, willingness, commitment, speed, but also inherently being very risk averse. And even though we know that the regulator is, things are improving from a regulation point of view, which is a good thing.
Yeah.
And we also know that a lot of the rules are about interpretation. Yeah. But if a finfluencer can put out a video on the morning that someone finds really useful, telling them what's happened in markets today, companies should be in a position to do that too.
Completely
now, whether
agree.
they're not doing it because they don't have the skill set or there's not the will internally, that's a debate company by company. But I do think you should have influencers, and they're a very important part of bringing a younger generation on this path. And I also do think the younger generation, because they need to be, are far more conscious of money, because nothing is being made easy for them.
Yeah.
They've got student debt. They are living with their parents. They're struggling to get a foot on the property ladder. They're struggling to get jobs. They've got AI coming in and disrupting. They've had all these crises. So they are far more money savvy, and they're choosing to follow credible finfluencers. And hats off to those finfluencers, because I think they're doing a great job, and a lot of them are doing a great job, and there should be more of them. My challenge should be to the companies who have the expertise and who have the trust and crucially have people's money. What are you doing?
That's a very fair critique, I think. I think maybe just to add in my 2 cents, I think I'm pro-influencer in general. But step back from financial services, I'm pro-influencer for everything. And I think to the extent they need to be regulated, all influencers should be regulated. I think you should be slapped with a penalty just as hard for saying something inaccurate in financial services that you know to be false, as if it was vitamins or medicine, or if it was solar panels for my house or whatever it is. I think that should be applied equally. And then I also think the risk, in my view, is so low. If I rewind to what you said about it is painfully difficult to do anything on any of these platforms around moving a pension or even accessing a pension account, the risk that I'm going to watch a 30-second video and then go and take financially devastating action is mitigated by, one, the fact I'm not an idiot, and so there's an element of just trust people to make reasonable decisions, and two, even if I wanted to, I would be stopped in my tracks 6 ways from Sunday. So it's just not possible.
So you're saying they shouldn't improve their proposition because they keep the friction in the journey?
I'm saying, well, I think if there was no friction, then I think the influencer risk becomes more pertinent. But frankly, there's so much friction. Unless an influencer is going to reach out of your phone, start tapping itself on the screen, nothing's going to happen.
And this is a similar view I share, and having done a lot of research on that, the friction between watching a video and actually then going and taking an action is huge, and there's a lot of checks and balances in between. I think the bigger challenge, and I 100% agree with you that content creators should be regulated and should be fined if they are putting out inaccurate information that is having or could have a detrimental impact. The problem here is that the creators or the owners of these platforms, they can't even control the content that's being put out there with their very clever algorithms, because the genie's out of the bottle. So what is the solution then? Well, make sure that the content creators have the education in terms of knowing what the guardrails are and knowing where the limits are. So if we created more education, if we had more, not to curtail creation and creativity and useful content, but to make sure that there's a bit of a self-imposed regulation, I guess, because who's going to control the creation of content? It is vast.
I mean, you made that point about the genie being out the bottle. It's, from my point of view, it's more that the platforms have abdicated their responsibility. And so in the absence of anyone doing any sort of moderation or quality check, it then
Yes.
falls to the creators.
But also, not being the tech expert by any means, I do think with AI, exploding, AI can help with that.
Yeah.
In terms of you finding rogue players and finding rogue content, and do it at a scale where human intervention can't, unless you can spend your whole life sitting watching TikTok videos.
Which, given AI is going to take all our jobs, may end up being what we end up doing.
Maybe.
No, I'm kidding. Maybe just before we wrap, a final question. Is there anything you've seen over the last few weeks, a news story or item that you've just thought was completely ridiculous or funny or strange?
Oh wow! Now you're putting me on the spot. Well, I tell you what has really annoyed me.
Go on.
Is the tinkering with the stocks and shares ISA.
Okay.
I from the beginning, when this notion about let's reduce the allowance on the cash ISA so that people will then put more into their stocks and shares ISA, I've been quite vocal that this is a bad idea, because cash has a role to play, and reducing that allowance is not necessarily going to make someone go to a stocks and shares ISA. Now, the end result, the unintended consequence has now been, out of the fear that people will then use their stocks and shares allowance and park cash there, they've tinkered with this really beautiful vehicle. Stocks and shares ISA is a brilliant wrapper to invest in, because it's, as we all know, is free of tax. The allowance is really generous. But now there are some vehicles that are cash-like that you might get hit with a tax charge. HMRC is watching. I'm like, how to take a really beautiful, simple vehicle and overcomplicate and over-engineer it and put people off. Now what you might find, I'm just going to stay away from stocks and shares ISA, because what if I'm going to be slapped with a tax charge?
So yeah, I mean, I understand that. I've heard that view a couple of places. Counterpoint, it's not that serious. It's not that deep. In 2 years' time, everyone will have wrapped their heads around it. People coming in new to this product will be like, those are the rules. Cool, makes sense. I'll figure it out. We'll have all digested it because we'll be in our, on our mountaintops, very enlightened people, etc., etc., speaking in jargon and whatever else. But yeah, it's a little bit. Any rule change, any friction. You had it when they introduced the lifetime ISA, and now they're changing that, and the new thing's better. But what about the people complain about everything?
I think though, complexity is the enemy of getting people to do something. And that's why Pension B's proposition has been so successful, because the essence of it is simplicity. Make it easy for me. Don't overcomplicate it, because there's a fear that I might get it wrong. And that fear of getting it wrong leads to inertia. And we need to make it simpler. That's my first point. Don't overcomplicate it. This is overcomplicated. Maybe people will get their heads around it, but was it really necessary? And then make it easy. Make it easy. Third point is stop changing the rules. Stop tinkering. Because even if people say, well, okay, I'm not an idiot, I can get my head around this, it creates mistrust or distrust. It's I'm not going to put my money in a pension, because who knows if pensions are going to be around? Who knows if the government's going to change the rules?
Or they're going to get dragged into IHT.
Yeah, well, there we go.
All of a sudden.
That's a whole topic for a whole new podcast.
Well, we'll do that next time.
Sure.
Maike Currie, thank you so much for joining me. It's been a wonderful conversation. Please let everyone know where they can find out more about you and Pension Bee.
Okay, so when I'm not a roving reporter for Pension Bee in my yellow coat or my heatwave friendly yellow outfit, I am on Instagram, I am on LinkedIn, I'm on YouTube. I've also got a venture which is called Empowered Investor, which is all about getting women to invest, so building empowerment and education for women. So I'm constantly with my colleague Marla Velaykum. We are doing courses for women, and that's really rewarding. As you know, it's been a passion project of me to bring women to the world of investing, because investing is the way we grow our wealth.
Fantastic. Thank you so much.
Thank you so much for having me.